I'd be a lender. I think the risk-adjusted return you can make if you just go in places where the Pfandbrief lenders are not going is absolutely fantastic. I think the cost of debt, for the reason we've explained, is really high if you look at it from a borrower perspective. If you're a lender, I think it is a great time because there's no cost of seeking these opportunities. People will come to you. So you don't have to have a big platform of originators. People will pay for your lunch. You don't have to pay. And basically the fundamentals are you can get 6, 7, 8 and counting type of return for something which has got where you have quite a lot of equity coverage without looking too hard. So I think 500 million won't take very long to deploy in that context.
Great. David?
Yes, I mean, I agree in many ways. I mean, debt origination, we're finding a lot of focus on that area. I mean, there is an issue as to whether there's more and more mezz lenders in the marketplace and whether the market's become too competitive or whether they're actually correctly pricing the risk of being subordinate in a sense. And we found at the senior level, the pricing between sort of 5 and 6% and the 6 to 8% is quite a different sort of product in a sense. But I think that there's very much is a growth area. In terms of other things, I certainly wouldn't look to buy a portfolio of distressed loans because I think there's too many people under pressure on their acquisition periods to buy them. And who knows whether the pricing is correct at the moment. I would have thought on a portfolio basis there's more opportunity down the line where at some point the regulatory pressures on the banks will be punitive and they'll get rid of things more quickly. Also, as I say, operational assets where there's enhanced pressure on the banks and sometimes looking to do deals with a borrower on a buyback of loans where quite often, again, where there's an operational cash flow, the bank is actually undervaluing the asset because the valuers have undervalued it because they don't want to be sued.
Great. Russell, what are you going to do with my 500 million?
It's a good process.
I do think there's a good opportunistic market coming, but if you and so I would prefer to put it aside and wait and invest in probably 6 months' time, 6 to 12 months' time. But if you force me to spend it in the next 3 months, I would put it into senior debt in non-prime assets in good locations. Probably in the UK or Germany.
Okay, very good. Harry?
Yeah, I would probably try to look for an off-market deal to avoid the crowd at the auction and try to find assets within preferred vendors that have something more than just a capital requirement to untangle them, that have sort of operational issues where we can sort of apply that skill set along with the capital and not just apply capital and hope that the macroeconomics will work out with the for that you need then the operational capabilities that we believe we have.
I do think that the comment about lending is really accurate. I think I would construct a portfolio like what we're doing, which is it's going to definitely have some mezzanine lending in it. It's not going to be the stuff that the banks should do. It's going to be very high octane, sort of more on the development side, good locations. We're doing it already, and we're seeing a huge demand for it. Where there's value creation by the developer, where we also feel like we could take the senior lender out at par, or at least get senior lending to, supplement that if the project goes south and we have to take it over. I would also look for some some stable assets which just produce yield, which you can actually buy in cash without leverage right now at great yields, in some of these sort of slightly off-pitch locations, with the hope that someday the leverage markets will come back. And then I would also try to do a smattering of stuff where we're really adding value in core markets where pricing may feel a little tight at first, but we think we can add value. So, and I agree with also, I would not be looking at non-performing loan pools. I think the costs of entry are extremely high, and 500 million just isn't enough.